So Q3 started on the back of the Brexit decision. In the end, it was a non-event. Markets came to the conclusion that heavily depreciated sterling combined with easing by the BOE would be enough to offset the systemic risks. So we had the S&P 500 trading in a very tight range for much of the Northern Hemisphere summer, around about 1%, but this finished with a bang when the markets came back to life in early September. The real risks emanated from the bond market, whereby a lack of forward guidance from the ECB and rumours that the BOJ were going to target a steeper yield curve led to a significant bond sell-off. Equity investors had flashbacks to the taper tantrum and started selling stocks alongside certain model accounts such as risk parity funds that sell stocks and bonds as volatility rises. The real winner for the quarter was emerging markets, whereby a Fed, again pushing out its hike path and lowering its neutral rate, saw support for EM equities and EMFX. Regarding the Morphic portfolio, the key beneficiaries were our significant positions in India and Pakistan that benefited from the EM story. On the downside, our long-held short in Woolworths came under pressure as investors reappraised after significant business changes raised hopes that maybe the worst is over for now. Our outlook remains very much in line with our half-yearly commentary. We're constructive, more constructive than most of our managers on the street. We believe there's continued upside in this market. Earnings have regained their highs and bond markets will remain supportive for equities for some time. We're fully invested with most of our overweight exposure concentrated around the emerging markets, India and Pakistan.